Hey, good morning, everybody. I want to thank you for joining us today. I'm coming to you today from Chicago, where we'll get ready to go here in just a few minutes. As soon as Dave logs into the meeting, we'll be going good. Uh, just here for a couple of days of training before we take a couple weeks of downtime up in Alaska. So I'm glad you joined us today. I hope you enjoy what we've got to talk about today. Dave will be with us here in just a moment.
0.7 there. We're at 837. 23 here before 9. Let's check in on your money. The wild ride continues on Wall Street for the moment. Uphill's kind of a nice direction to go for a change. Let's check in and see what's going on from Statler Financial Services. Phillip Statler is on the telephone, and I didn't even ask where you are this morning. Phillip, how are you?
Hey, I'm doing well today, Dave. I am sitting in downtown Chicago, getting ready for a couple days of training with a mastermind group, trying to get better at what I do and better at serving our clients. And so glad to be here. It starts in about an hour. Of course, you know, it's 7:40 here, not 8:40 like it is there.
Yeah, we kind of rolled you out of the sack a little early on your local time zone this morning. I know you do this on a regular basis, and you always come back with all kinds of interesting insights as far as how to do a better. Boy, oh boy, are the challenges going. Just to back up and start to set the table for the morning, Friday was a solid day overall on Wall Street. The Dow was up by 1.2%, up by 306 points. NASDAQ up by 1.75%, up 129. Standard & Poor's up by almost 1.5%, up 41. Boy, happy days are here again. But this week is going to have a lot of pitfalls going on. Among other things, we started out with Europe getting some bad economic growth news at the end of the week last week, but that turned optimistic when Germany made some noise about saying, we'll commit whatever funds we need to for stimulus. We're not going to accept a recession in Germany. And that kind of made people happy, didn't it?
Well, it did make people happy, Dave. But the other thing that I've seen is that you know, the European markets have had three bad weeks here, and they are turning around this morning, evidently. And so I think that's probably some good news there.
That helps a lot to have one of our major trading partners, number one, aggressively fixing their challenges, and like I said, seeing their markets go down by a little bit. Add to that the fact there's some optimism in our trade talks with China. Some of it, the fact that we're talking, and I got to believe some of it, is if the Hong Kong protests stay peaceful enough to not generate any violence from the Chinese military, just keeping China occupied with Hong Kong means they're going to get, there's a possibility of them getting a little bit softer in their talks with us as well.
Well, I think so. I mean, and the other thing I think is that, you know, they've come out with, evidently China's talking about stimulus now. And then the other thing I saw was, and I'm not sure how much credence there is to this, but the White House analysts are talking about telling Trump that they think as a group that, you know, we're going to be in a bull market until the end of 2020. Now, I think that may be a little optimistic.
Well, they pretty much had the talking heads out over the weekend saying there's no indication of a recession, yada, yada. And, you know, there's a lot to be said for positive talk out there because, you know, as you and I have both said, it just takes an event to be able to trigger a downtick or a recession. And if we have enough positive talk out there in the press, it can counterbalance some of that. And yes, it might actually have a positive economic effect.
Well, and you hope so. I mean, because, but you and I continue to talk about how long can this thing continue, right? I mean, how long can we continue in pro-growth mode? You know, we're going on better than 10 years now, and it's not going to be too long. We're going to be in year 11, and we continue to hit new records when it comes to this bull market without a recession or without a bear market in between.
Yeah, absolutely, which kind of addresses the thing you and I have always bandied about. We know a recession of some sort is inevitable, and we always cross our fingers for a quote-unquote soft landing. We do have a chink in the armor, something you and I both noticed over the weekend. The number of junk bond defaults, and junk is a bad term. There are a lot of high-interest notes from companies that you and I would recognize, household names, that are classified as junk simply in terms of the credit ratios on the company. But there's been an awful lot of defaults over the last few months, haven't there?
Well, I did see that headline, Dave, that right now, at the rate we're going in 2019, that the junk bond defaults will be more than what they were in 2008. And that to me is somewhat surprising, given that, quote, our economy is in such good shape.
That's true. At the very least, we know they always talk in the politics world about the rich getting richer. The companies that are in the marginal shape are the ones that are putting out the junk bonds, quote unquote, and they're the ones that are defaulting. And if the pace is up to 2008, that's not exactly a year you want to parallel.
You're absolutely right, Dave. That's one of the years that you want to stay away from if you're comparing yourself to it, because that just was not a good year in the market, and definitely not a good year when it comes to bonds and default rates. So definitely not a good sign, and hopefully it's not something that's going to continue. But as we head into a recessionary period of time, I'm sure it will be. I mean, as contraction happens, that's just going to be a normal course of business.
I understood. Did you see any analysis on it? Because the thing that hit me when I looked at it is, well, we were pushing interest rates upward for a little while with the Federal Reserve. That, by definition, pushes up the cost of doing business, and even more so for the marginal businesses. I wonder if some of that default rate wasn't caused by the uptick in interest rates that we had for a while.
No, I didn't get a chance to dive into it. Matter of fact, I just saw it as we were getting ready to go on air. I saw the headline, just kind of caught my attention.
Understood. The other thing that might affect money this week could be the fact that the Federal Reserve and all the movers and the shakers in big-time banking are meeting out in Jackson Hole, Wyoming for their annual retreat. The meeting itself takes place on Thursday. Either on Thursday or on Friday, we'll get some press conference action coming out of Chairman Paulson, and the talking heads on CNNBC and all the pundits are saying it's almost certainly going to be a disappointment for people that are hoping for a really loose money policy out of the Fed, because they're showing no indication of doing that.
No, they're really not. So this week is you're right. That will be the focus in the business markets. You know, there'll be all kinds of interviews even leading into that. You know, I'm sure that folks like CNBC, they've got a studio set up out there, and they'll be interviewing these CEOs as they arrive and scheduling time to talk to them about what the meeting looks like to them.
And they're going to take anything they can for a leak out of the meeting, because the Fed governors are sworn to silence until afterwards.
Well, exactly. So, you know, on the earnings front, we only have really one company reporting, Dave. Go ahead.
I was just going to say, it's a big win, though, for the one report we've got.
It is. Estee Lauder came out, the cosmetic companies, and you know, the ladies are keeping them guys busy and doing well for them. They beat by 11 cents a share. Revenue was also above the forecast, and they issued better than expected full-year guidance, you know. So there's nothing on the losing end of Estee Lauder right now, and they're up 8.25% this morning, Dave, before we get started.
Not bad. I know one of the trendy stocks that people watch are the marijuana stocks. You mentioned that you had some tidbits on them as well.
Well, I did. I saw where on Friday, Canopy, one of the main stock companies, was down about 14%. And I think that industry as a whole is struggling a little bit with quality, production, regulatory issues have been a big deal. And so that industry, as much as people want to get into it, is really struggling right now to a certain degree.
I can't help but giggle on the notion of who does quality testing on commercial weed.
Well, there is, you know, I mean, they do. They're really, from a regulatory standpoint, quality control and production has been a big deal.
I know, but it's fun to be fun of at the very least. Well, like I said, it was an up day on Friday, and we've got generally good news to start the morning out in terms of optimism. Have you got your finger on the markets for the futures this morning, Phillip?
Hey, I've got a couple of them, Dave. I've got the Dow futures right now up a little over 1%, just a little over 26,000 right now at 26,181. I've got the S&P 500 right about the same boat, up a little tad over 1%. And then we've got the NASDAQ up 1.3% this morning. Let me see if I can find the oil futures real quick. We've got the oil up right now about 0.5% to $55.12 a barrel.
And I got gold showing up a little bit, off a little bit this morning, almost down a full percent, down to 1509, which is kind of an indicator, together with the fact that the 10-year Treasury bill went up by 6 basis points in the overnight hours. A little bit more faith in equities for the moment, isn't there?
Yeah, it seems to be. It seems to be. We've got some momentum back after Friday's close, after several weeks of ups and downs. So I think that's probably a good thing right now.
Absolutely. Looking at the overseas markets, as you mentioned, Phillip, Europe generally up and up substantially midway through their day. The Asian Rim markets were also up. Little peace in Hong Kong, at the very least peaceful demonstrations in Hong Kong. Their market was up by over 2% when they closed bright and early our time this morning. Phillip, you may be on the road, but I know the office is open. How would I make an appointment with you in order to straighten out my retirement and make sure that all of this upsy-downsy stuff we talk about won't affect my future?
You're right, Dave. The office is absolutely open, and now's the time to schedule your appointment. So when I get back in the office, we can sit down and start going over things. Hey, call us as your retirement coach, doing our X-ray analysis of your current portfolio. Give us a call at 382-0037, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
And back together again here tomorrow morning on Light F.
Did I lose you, Dave?
Financial Services, Phillip Statler.
Have you done your homework yet? Yes, you. Have you done...
Did I lose you there?
I lost you right at the end.